Etsy, are you hip to them?
Well, I think it's a really
They're Eric's neighbor
play.
in the Brooklyn.
And mine, so it's very exciting. I think it's a great niche product, niche company, but it doesn't have the sustainability at this stage. It hasn't proven the sustainability or the profitability to be a long-term great investment. I suspect the IPO will probably do well today. There's not a lot competing with it, and I think that that will probably bode well for the momentum players. But we rate them on our scale of 0 to 100 with an FHR, financial health rating of 23, which is high risk. And it has good liquidity properties. We'll have more liquidity after the IPO, but it doesn't have profitability, generating any returns, and it's slowing growth over the last couple of years.
High risk isn't necessarily a bad thing, right? High risk, high return. You take a flyer on Etsy, you could make a bundle. Then again, if a company never makes a profit and investors don't give it as much leeway, shall we say, as they give Amazon, you might not.
No, I think that's exactly right. But as Bloomberg's Leslie Picker wrote very recently, it is probably an acquisition play. And
by whom? An eBay?
An eBay and Alibaba. I think there are players out there or a player to be named later, who could look at this and see this is an opportunity to capture this niche within the overall e-commerce space. And I think they have a first mover advantage, and they have a lot of very exciting things going for them as per the enthusiasm of the vendors that are a part of their network. But do they really have a long-term defendable position? It's really hard to say.
Well, why wouldn't they, though?
I mean,
they have a from what we can tell, right, pretty decent business model. They've carved out a niche for themselves.
I don't know who their competition is.
Exactly. They don't appear to have any direct competitors. You could envision maybe an eBay deciding to do something like what Etsy has done, but to your point about first mover advantage, they've built a pretty sizable platform in this niche market. And
that's right. And
eBay can't do this overnight.
No, they can't do it overnight, but they could throw a lot of money at it if they really wanted to. And this isn't to say someone comes in and immediately replaces Etsy. Etsy does have the first mover. However, there's no real competitive barrier other than the loyalty of the artisans who are already selling through them. And we don't want to belittle that. I think that there is extremely high enthusiasm, but it doesn't mean someone else can't come in and start to chip away at them. But then you get into the buy or build question, and then you get back to the acquisition question. If an eBay wants to be in this market, does it make sense to try to build and compete with an Etsy, or just to buy them?
But is Etsy do they just have the first mover advantage? I mean, I can't think of another competitor. So I think it's more than just they're the first ones in the space. In terms of being, a small craftsman, someone who makes their own product and wants to sell it, Etsy seems like the only game in town.
Well, I think at the moment it is.
But then why would that change? If it hasn't changed already, they didn't start up overnight.
Well, if they do well, they're going to prove that there is a niche market, and it's a niche market that has value. But let's keep in mind, it is only a $200 million company in 2014. So it is still relatively small.
Well, eBay was once small, too.
That's correct.
Here is, like, if you're a believer in Etsy, here's, I think, the best illustration. Now, I have to give credit to a firm that kind of competes with yours, Triton Research, for putting this chart together, but I think it helps to speak to the debate that we're having. Here's eBay today, right? eBay generates roughly 22% of its gross merchandising volume as revenue. Pretty good, I guess, whatever, throughput, if you want, right? Etsy, on the other hand, is about half that. So if you believe that Etsy is going to be the next eBay of sorts, that's the room to grow, right?
Right. So I think there is room for growth. And so any competition aside, any investor coming into the IPO today needs to be paying close attention to how well Etsy is able to use the proceeds from the IPO and begin to drive towards profitability. Ultimately, companies need and should be profitable. Amazon, perhaps, as the notable exception. But anyone coming in now should be paying close attention first quarter, second quarter, third quarter as public companies, whether they're able to execute and start driving.
What would be the warning signs? It's going to take them a while to be profitable. They're profitable on an adjusted EBITDA basis. That is pretty much anything you want it to mean, so we can forget about that for a second. Between now and net income... No, I'm not. I'm just a realist. What do you need to see? And what should you not want to see?
I think what you really want to do anytime you're investing in an IPO is look at the second and third quarters after they go public. The first quarter is almost always in the bag. The investment bankers who bring a deal, unless it's like a box which had to come to market when it came to market, they're going to make sure that the first quarter numbers are going to be hit. So don't look too closely at that. It's the second quarter and the third quarters. If they're exceeding or they are falling short of analyst expectations, and if they are not able to hit their own growth targets, that's when you need to be paying close attention. The question is, where are the momentum investors then, and how hot is the IPO market at that stage? What kind of competition is there for that capital at that time?